Something massive just broke. Hey guys, Britt here. Welcome to End Times Bible Prophecy. Last week, something big broke, and it's a huge problem for the overleveraged global financial system. It's also a big deal when it comes to Bible prophecy because what's coming ultimately sets the stage for the end times financial system we read about in Revelation 13. So in today's video, we're going to talk about what happened last week, what's currently happening, and what the end result is going to be. And I want to underscore is going to be, not likely to be, as we often talk about, but is going to be, because this is a matter of math. It's a matter of when this is going to happen, not if. So let's start with this right here. This is from DCD. It says, cooling issue at data center halts futures trading for CME Group. And this happened the night of Thanksgiving in the United States. So a week ago, Thursday, in the early morning hours of Friday. And we saw the shutdown last for 10 hours. It says the CME Group was forced to halt futures trading today after a cooling issue at one of its data centers. So let's talk about what this is. So what is CME Group? CME Group is the parent company of the Chicago Mercantile Exchange, the COMEX, where gold and silver futures are traded in the United States. So they are one of the largest commodities futures trading houses in the whole world. So what does that mean? Well, when you buy a futures contract, you're buying a contract that says, I want to receive corn or wheat or gold or silver or something in the future, oil, whatever it may be. And I want to lock in the price now. So from the standpoint, why does this exist? Well, the reason this exists is, let's say you're a farmer. You want to know what the price your corn is going to get once you grow it, because it takes time to plant it, grow it, harvest it, and the price can fluctuate during that time period. So before you lock in all of these expenses, you want to have an idea of what you're going to get paid. And likewise, the buyer of these commodities, often their inputs into other products they're making, they want to have an idea of what their expenses are going to be as well. So this benefits people in the real economy. The problem is, for decades, the futures market has been dominated by speculators who are just buying and selling the contracts themselves and not the underlying commodities like corn and wheat and oil and gold and silver. So this is just rampant speculation that distorts the free market price of these items. And we've talked about this is the derivative. This is part of the derivatives market. So these paper contracts, they're derivatives of the underlying thing that they're promising, which is something real. So corn, wheat, gold, silver, whatever it may be. And so we've talked about these paper markets, how especially in all of these paper markets, but especially in gold and silver, there's many more contracts than there are ounces of gold and silver to be delivered. It's a massive game of musical chairs because over the decades, the ones running the system have realized, well, nobody actually asked. Only a small portion of people actually ask for delivery of these things. So let's slip in another paper promise, knowing that they're just going to trade it. And we can make ourselves wealthy in the process. Well, that's gone on for decades, to the point where some people believe there's 400 or 500 contracts for every ounce of silver in existence. And that very well is why we're going to look at in a moment. But people speculated at the time, why did we have this halt right here? Why was this really a cooling issue? Well, no, we immediately saw skepticism in relation to that. We have this tweet here from Solve Nedig, I'm not sure, hopefully I'm pronouncing that right. It says CME did not have a cooling issue. It was about buying time, delaying their problem, trying to reduce the damages. And that's in response to this tweet about how unlikely it is to see one of the largest commodity futures traders in the world go down due to a cooling issue in a single data center, right at the time when we were seeing silver futures spiking to near all-time highs. So we have this as well from Silverbark, who wrote, "Silver, can you believe this is the point in time when a cooling issue erupted?" And he said, waking up on Black Friday to the commodity markets frozen by a, quote, cooling issue just as silver futures were launching. So he does not believe that. And he's right. We look at the last time we had silver futures this high, we had to go back to 2011, the aftermath of the great financial crisis. And then it just so happens that they had this cooling issue right at the exact time when silver is spiking and more people are wanting delivery of the silver. You also had this from Bar Chart, who said CME getting ready to have another cooling issue. And it shows gold and silver skyrocketing, and while all of the traders are dumping ice on all of the cords, that's their cooling issue because, well, we got to stop this. We can't have this, because the silver is not there to be delivered. And we're going to look at that, the math of that, in just a few moments. How about this? So Nobody Special, who I would say is someone special made by God, but they've titled their account Nobody Special, wrote, "The CME group shuts down trading right as silver reaches an all-time high due to a, quote, cooling issue at a data center that doesn't seem to affect anyone else other than the CME group." So you can see there's widespread skepticism when this happened that they really experienced a cooling issue, and they did not, as we'll look at in just a moment. But Gold Silver headquarters put this out at the time, saying, "We're witnessing the destruction of a rigged market in real time." What a time to be alive. And we are witnessing the destruction of this rigged market because, again, there's more paper promises to deliver these commodities such as silver, but especially silver and gold, than there are actual silver and gold ounces available to be delivered to fulfill these contracts. And they count on these being rolled over or being cash settled in order to prevent a failure to deliver on these contracts, which would have huge repercussions for the financial markets. We'll also talk about that as we go on through here. But again, was this just a coincidence that they had this cooling issue when they did? No, it was not. We know now for certain. So this came out a few days, well, yesterday. And it's from Eric Young. He says, "It looks like the banksters managed to cash settle 6,186 COMEX silver futures contracts." So each one of those contracts is about 5,000 ounces of silver. It says by paying a premium of $1.77.5 per ounce to the willing long. So basically, someone came in and said, "I want my silver. Here's the contract to deliver my silver." And they said, "Well, how about we give you cash instead of silver, and we'll give you an extra $1.77 per ounce." And somebody said, "Okay, yeah, we'll do that." Right? Why would they offer that? Well, because the silver isn't there. It says JP Morgan also moved 13.4 million ounces of silver from COMEX registered to eligible. That basically means that it is no longer available for delivery, thus either protecting their own physical silver or their customers' physical silver from withdrawals. These are all actions that the banksters are taking to, quote, kick the can down the road to defer the imminent inevitable. And it is imminent and it is inevitable that these markets will have a failure to deliver on these silver contracts because, as we mentioned before, it's a game of musical chairs. There's way more paper promises than there is actual silver. So when the music stops, we're on the precipice of seeing the music stop, they will be unable to deliver. There will be no more silver. Let's take a look at this right here. This is from the Silver Institute that researches silver supply and demand. And here we have supply by year. This is the amount of silver that's being mined during the course of a year. And then we have silver demand. So we have total supply right here. We have total demand right here. If you'll notice, demand so far this year has outstripped supply, as it did last year, and the year before, and the year before, and the year before. You have to go back to 2020 to find a year where supply exceeded demand. So for 5 years now, we've seen a depletion of silver supplies, above ground silver supplies that are available to be used in industry. These are used in solar panels and batteries and all sorts of different places. Every cell phone, every computer has a component of silver in it. So this is used in industry. It's used as a monetary reserve for individuals as well. No nations use silver as a monetary reserve anymore, but people do. And so investor demand and industrial demand is outstripping the amount that is supplied each year. Again, this is a big problem. So we got this from Just Dario, who said, just in an additional 565 silver December 2025 future contracts were put into physical delivery on Thursday. So this is yesterday, equivalent to 2,825,000 ounces of silver. The total physical settlement in December at COMEX rises to the equivalent of 50,460,000 ounces of silver. What does that mean? Well, that is the equivalent to almost 50% of the float that they have available to deliver at COMEX. So in other words, what they had last week, half of that's gone now. Now, does this mean this market is going to break this week? Probably not, but we are getting close to that. As Just Dario writes on his website, justdario.com, I'll pin a link to this article if you want to read it in its full. In its full entirety, you can do that, but he writes why it's likely this is going to happen in March. So let's go down here and look at what he has to say about that. He says the picture changes dramatically if we take a look at silver March 2026 futures contracts. So we're talking just 3 months from now. January and February contracts open interest is so far rather small, well below 5,000. As you can observe in this table, the open interest for silver CME futures with a March 2026 expiration is 118,815, equivalent to almost 600 million ounces of silver. Right now, it's believed they have about 50 million. It says, to put this in perspective, the total physical production of silver in 1 year is roughly 900 million ounces, and the deficit compared to the total industrial demand has been roughly 200 million ounces a year since 2020 and is expected to be the same in 2026. After the December 2025 contracts, the COMEX silver free float can shrink as low as 50 million ounces, with the potential for the one at the LBMA, so that's the London Bullion Market Association, to shrink even further, primarily driven by the high demand for physical silver exchange-traded funds. Let's put it all together now. On one side, there are industrial companies that must secure enough supply of silver not to risk halting their operations. On the other side, the free float of physical silver left will barely be enough to cover the silver mining production shortage expected in 2026. This translates into potentially 40,000 CME March 26 futures contracts being requested for physical delivery. To give you an idea, the highest amount of delivery requests recorded in recent times was 11,458 in July of 2020. So this would be just short of 4 times that. What does this mean? Well, it means that, again, an industrial demand for silver will not go away. Apple needs to make more iPhones, and so does Samsung, and they need to make refrigerators, and solar panel operators and manufacturers need to make the solar panels. So all of these different components, all these different products that have silver as a component, they need to have the physical silver. A paper promise, when they say we want delivery, and and they hear back, well, how about we'll pay you a premium of $1.77 for your piece of paper contract? Well, they're going to say, well, no, I need the actual silver. I need the silver to put in my product. I can't put $1.77 into that product. And we talked about this before, where they managed to kick the can down the road financially globally, all the central banks, the politicians, because they're printing dollars, printing yen, printing euro. But you can't print things like oil. So if we have an oil shortage, well, you're not going to solve that by printing more currency units, right? And if someone needs physical silver, you can't solve the problem by offering them currency instead. They need the physical silver. And what the math is saying is that come March, it's likely there will be no silver left at current prices. So that means that, at what price would it be available? Double today's price, triple, quadruple, who knows? But if that is the case, then what does that mean for the global financial system and all those, including major financial institutions that have shorted silver and then are forced to buy it back at elevated prices? That itself could break the entire global financial system. So we have some major problems. And we had this is the key problem, I believe. This goes beyond just whether a major bank is taken down. And we've talked about this over the last couple of years, about this could even be an attack on the West by BRICS nations. It could be an attack on the United States by Russia or China. Or it could just be the free market. We don't know. But Alistair McLeod writes here, he says, I think the paper game is being fractured through silver and then gold. We'll look back on these events and say they marked the beginning of the decline in the entire derivative business. So guys, this is much bigger than a few banks that might be short silver. It's much bigger than a failure to deliver on silver's future contract. This strikes at the heart of the trust that people have put in the entire derivatives complex. And as we've pointed out, I believe the low estimate on the size of that derivatives market is $1 quadrillion globally. And we've pointed out it's most likely $2 to $4 quadrillion. Nobody knows for sure. Nobody in the world knows the accurate figure. But we'll start to find out how important that is once those contracts start blowing up. And as people lose faith in this system, the system of paper promises that can't be delivered upon. And we're seeing problems like this elsewhere. Where else are we seeing problems like this? Well, let's look at this right here. So this is on CNBC. It's showing yields on Japanese government bonds. And as of this recording right now, the yields on most of these are up. Let me point out that this century, these are the highest yields we've seen on all of these bonds this century. You have to go back to the 1990s to find higher yields on some of these Japanese government bonds, and on the 30-year and the 40-year, they're at all-time highs. Well, the 30-year is probably the all-time high was yesterday, right? But it's way higher than it was. What are these Japanese government bonds? They're paper promises to pay back a certain number of yen over time. What is a yen? Well, it's a paper promise, right? It's not backed by anything. They can print as many yen as they want. In fact, they're printing yen right now to buy back these government bonds. That's why the yields got so low to begin with. But this is a major problem, as we pointed out over a year ago in this article, How the Current Global Financial Crisis Leads to Biblical Tyranny in 10 Steps. What did we put at the beginning of that article? The Bank of Japan is trapped. The fourth largest economy in the world is on the precipice of complete implosion. No matter what path they choose, it either ends in massive deflation and destruction of the fourth largest economy in the world, or massive hyperinflation and destruction of the fourth largest economy in the world. It's math. There is no way around this. As we read here in this Just Dario tweet from just last night, he says, 500 billion Japanese yen bank stop from the Bank of Japan today to wrap up the week without major hiccups in the market. That marks the 149th intervention by the Bank of Japan since July 29th. So they've been actively trying to distort the free market, keep this market from breaking to the tune of 149 interventions since the end of July. So that's 4.5 months. And yet it obviously is not working. What else? Well, how about this from the Kobayashi letter? It says it's a complete free-for-all in Japan. Japan's 10-year note just hit 1.92%, the highest level since July 2007. It's actually, so this came out 2 days ago. Well, the 10-year is 1.95. So it's actually the highest it's been since the 1990s. 10-year yields now up negative from negative. So they were actually yielding negative interest rates, negative 0.28% to 1.92%, make that 1.95 as of today since 2019, as Japan prepares to raise rates into a $135 billion stimulus package. How long can Japan keep holding on? And look at this graph of the rate on the 10-year. So Japan is pushing forward a $135 billion stimulus package. They have the highest debt load in the world. They are twice as worse off as the United States. So people point out, well, the United States has $38 trillion in debt, but as a percentage of our GDP, that's about 120%. That's terrible. Japan's debt to GDP is 266%. So they're more than twice as worse off as the United States. Now they want to throw more debt on top with this $135 billion stimulus package. And of course, they were buying back their own bonds. That's how they ended up with negative rates 6 years ago, because they were trying to suppress the interest rate. They had to pay on their national debt, because if they did not do that, then the interest alone would eat up all their tax revenue and then some, and the whole system would fall apart. So that's where we're headed. right now, as of this moment, as these interest rates rise, eventually the world will lose faith in the Japanese government bond market. I believe they already have, but Japan can't keep printing yen. The Bank of Japan can't keep printing yen to buy back every single Japanese government bond, or then the yen, the currency of the fourth largest economy in the world, becomes absolutely worthless. You see the problems that we face here. This is a massive, massive problem with faith in paper promises, this fiat currency, debt-based monetary system that we've been pointing out for many years here on this channel. I'll conclude with this. This is a tweet from MD Morgan Hatton. She says, Wall Street is the only place on earth where you can sell trillions of things that don't exist. And everyone just nods like it's normal. If I sold my neighbor's house without owning it, never delivered the keys, and kept the cash, well, I'd be in prison before dinner. But if a broker sells synthetic shares they never had, never located, never intended to deliver, it's called, quote, market structure. A little hanky-panky, a rounding error, a shrug. Make it make sense. Trust in the system isn't declining, it's evaporating. People are waking up to the fact that the entire market is held together by IOUs stacked on IOUs stacked on lies. And what have we been saying on this channel for years now? The entire global financial system is a Ponzi scheme built on a house of cards constructed on a foundation of lies. And she says that, well, it's IOUs on IOUs stacked on lies, but essentially saying the same thing. We're told no one is above the law. Cool. So when do we start applying that to financial markets? Because every day this continues, the receipts pile higher and higher until one day the bill comes due. And guys, the bill is coming due. Again, they can kick the can down the road as long as they're able to, the central banks, the politicians can print cash to bail out the system. But they can't print oil. They can't print gold. They can't print silver. They can't print and conjure out of thin air real things that are needed in the real world for the economy to continue. And we're at a point here where we can see the end of the line, at least in the silver market. Mathematically, it looks like March, they're going to run out of silver. And when they run out of silver, all these people are going to look around and say, well, I had a promise from you. I had this contract saying you're going to deliver me silver. Well, you read the fine print. It says we can deliver you currency instead. We can give you dollars or yen or euros. Well, I don't want dollars. I want silver. I had a contract for that. And then they'll say, well, if this contract was a fraud, what other pieces of paper are also a fraud? And then the entire system comes into question. Again, a derivatives complex that's measured in the quadrillions of dollars. And that's when you have a rush for the exit. The exit door isn't big enough for everybody to get through, and you have the acute phase of a financial crisis, the likes of which the world has never seen before. We've been warning about this for years now. And a lot of people have been posting in the comments for those years, you've been saying this. Never said it was happening next week. I'm just making observations of what's taking place. And we can see it. The Bible says the prudent foresee danger and take precautions. The foolish go about their business and suffer the consequences. We see these things taking place. prepare yourself spiritually, mentally, emotionally. Have a deep pantry, because once all of this starts to unravel, it will unravel quickly. And this is how we end up in the end times financial system we read about in Revelation chapter 13. Because again, once the system breaks and they realize, well, it's not just the silver market where 400 people thought they owned the same ounce of silver. People who bought stocks thought they owned the shares, but instead they had a security entitlement. And when the broker failed, my shares were lost. And they're going to be going to the politicians, and the politicians will say, well, we can't upset our banker donors by reversing the law here. What we can do is we can promise all of these voters who are saying they want to eliminate our jobs, they want to kick us out of office. We can tell them, well, we will restore everything. But here's what we have to do. We have to make sure this never happens again, that you don't lose your shares. We're gonna put them on the blockchain. We're gonna tokenize all of the shares. We're gonna tokenize all these financial assets so that it's transparent and everyone can see who owns what at any given point in time. And we're gonna tokenize all these assets. We'll give you the cash equivalent of what you had in your retirement account, but it's gonna be in a digital currency. And you're going to have a digital ID so that we know that you're the one who actually owns that currency or those tokenized assets. And then you can go into the market and you can buy back what you had, but it'll be tokenized. And people will say, I could lose everything or I could get it back by just taking on this new system this seems right. This seems to be the way to make sure nothing like this ever happens again. And they don't realize that they're just walking into a cage and the door will be slammed shut, because in that digital system, there is no out. Central banks, the politicians will have complete surveillance and complete programmable control over the currency, over the assets, and anyone that says anything or does anything that they don't like, they can simply cut off their access to that system. This is exactly what we read in Revelation chapter 13, verses 16 through 17 about the mark of the beast and control over who can buy and sell. Again, I don't believe the system itself, central bank digital currency or tokenized assets, stable coins, digital ID, that those are in and of themselves the mark of the beast, but it lays the foundation, it sets it up so that during the tribulation, that system is there to be turned into the mark of the beast. So guys, we can see all of this happening right in front of our eyes, along with all the other things that Jesus and the prophets pointed to, all the other signs that they said would mark the time just prior to the 7-year tribulation, to the second coming of Jesus Christ at the end of that 7-year tribulation. That means the rapture of the church is even closer, because I believe the Bible teaches that takes place before the tribulation. Guys, all of this is telling us one thing: Jesus is coming back. So make sure that you're telling your friends, your neighbors, your relatives, your coworkers, everybody that you can, about the hope you have in Jesus Christ and about the hope they can have, the peace they can have, even in the midst of global chaos, the peace they can have, a peace that surpasses all understanding, that can only come through Jesus Christ. So guys, let me know what you think. Leave your comments below. I think that this is a really big deal, what happened last week. I don't think this is all going to unravel in the next few days. It's going to be a multi-month process. I think March is a time to look out for, because that could be when we see a failure to deliver on these silver futures contracts. And that could have ripple effects, a contagion effect throughout the entire global financial system. And then things could speed up in a very big hurry. We'll just have to wait and see. Again, I don't know for certain that that's exactly what's going to happen, but observation is telling us we need to be aware of these things, and that the system, it cannot continue on. And what can't continue on will not continue on. So again, let me know what you think. Leave your comments below, and God willing, I will see you on Monday.